Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with another market recap. This time it is the 6th of November. It is election day. The stock market rallied, kinda, sorta, a little. We definitely closed in the green as we await those results. I think a lot of traders, myself included, kind of think that can impact where we go. I don't know how it's going to. I'm just going to be on the lookout for it to potentially do just that. So keep an eye on the futures market this evening or early tomorrow to see if there is, maybe something going on that how the market's digesting this stuff. Like I said, I'm not going to pretend to know how it's going to or why it's going to. I just want to watch that price movement to see what we can gather from it. So I'm looking ahead to tomorrow beyond the earnings. We do have a handful of earnings coming out, about, I think, 13 or 15 S&P companies. So not a particularly huge day in earnings, but a day, including Dish coming out tomorrow, 20th Century Fox, Humana, Core. So we have a few companies coming out before the open. So keep an eye on that, especially if you're trading any of those things. Good afternoon, Thiago and Shanta. I hope you're doing well today. Welcome, everybody. It is certainly always fun to see you guys. Hope the market's treating you right. Let's see how the day unfolded. It was really one of those days to me that kind of a nothing day. It did kind of close up, which is a good thing. And one thing happened on the NASDAQ chart that I'm excited to share with you guys because it's one of the things I really like to see personally as a technical trader. And we're seeing it. We talked a little bit about it maybe developing yesterday. We'll see it a step further here today when we peek at the NASDAQ. But of course, before we do, here's the S&P 500. Pushes up, getting closer and closer to testing that 200-day moving average. Again, is this a V-shaped recovery? I don't know. I don't want it to be, but it might be. I don't know. But we haven't taken out even the 200 in anything but the Dow just yet. That certainly can be a challenging area. Let's see how we react. Our resistance is still way the heck up here. So if you're just thinking about it from a pure trend perspective, it hasn't really, at least to me, done anything to suggest that we've done a reversal in trend. I need it to pull back, create a higher low, and then break whatever ends up being resistance. Of course, we haven't had an opportunity for that to happen in the S&P, but we are closing in on that 200. That's, of course, going to be something that we want to keep an eye on. We know other traders will be keeping an eye on that as well. Now, here in the NASDAQ, this is the kind of chart I can get behind. So we talked a little bit on the S&P. I need it to pull back, create that higher low, and then potentially break resistance to give me a buy signal, right? We were actually one step closer to that potentially happening. And beyond that, I have a very good idea of where it shouldn't go below and what I could be looking at from a bearish trigger as well. Well, I'll just leave that line there. I am terrible at drawing lines. So we've got our retracement, so to speak, in our NASDAQ. We had some sellers step in and start to trigger to the downside, certainly understandably so. And if I was one of them, while I obviously don't love today, really my bet, if you will, is that we're not breaking that swing high, that resistance level. Now, once again, through that downward movement, I know that that is a level of resistance, right? I'm not afraid if I'm in here, but I liked it a lot better yesterday. And on the other side of things, if I were to have bought into this hammer yesterday on that upward movement today, well, for me, I can only speak for myself, but I can say with absolute certainty my stop loss would be right below here. So from a bearish perspective, that would be the signal that I would be looking for. So I'm very happy with the development. I hope our overall market develops just like this in the days to come, because this is really what I want. I have bearish opportunities. Maybe I'm already in some, and a clear, at least in my opinion, signal of the higher low, if that's how it develops, break of resistance as a buying confirmation. So we'll keep an eye on you, NASDAQ, but that's how I would like if this is going to rally. If it just wants to be bearish and today's just a blip on the radar, no big deal. It hasn't broke resistance. I'm not sweating it or anything. But if I'm looking for that Santa Claus rally, and I think all of us are at least open to the idea of that, Well, we have to start turning these trends around, right? And what better way to do that than creating a higher low and a higher high? So that is definitely something that I think we can get behind, at least me. That is my favorite reversal type of thing to be looking for, is when we reverse trend, basically create the higher low instead of the lower one, and then take out that resistance. As we look at the Dow, definitely showing some relative strength over here in this index right now. It was, of course, the first and only to close above the 200-day moving average last week, and continues to show quite a bit of strength as we worked into this week. This actually looks like a very interesting chart. Now, once again, certainly we had to challenge the 200, but we won that fight, right? We've got this swing high, which is going to end up lining up very nicely, right about at that 50-day moving average. That's our next, at least in my mind, that next real level of resistance that we kind of want to be watching for. If we do pull back off of this, we can kind of see if that 200 wants to act as a little bit of a support level. And I know I'm early, so I'm not saying this is going to happen. But if we can have something like that develop, where we run up and test and then pull back and create a low somewhere in here and then rally again, that's going to look a little bit like a head and shoulders pattern, right? With our left shoulder here, our head here, and our right here. Now, obviously, that hasn't happened yet and may very well not ever happen. But I always kind of like, yeah, that would be interesting. That would be a very interesting sign, especially knowing that a lot of traders out there are looking for a Santa Claus rally, because we're used to seeing Santa Claus rallies a lot of the time around this time of year. So will be fun to watch, but it'll be interesting, when we get to that, if we get to that resistance without any sort of a pullback. Again, I'd like to see a pullback, then a break of that. That would be a really good bullish signal, in my opinion. Over on the Russell, it's got more work to do. But as we've talked before, the one thing about this, the pullbacks, the bearish retracements were looking really good on Thursday and Friday, and there's still plenty of good looking ones out there, in my opinion, but not as many as there were when I was scanning on Friday. We're starting to see things, breaking above these shorter term averages, which, for me at least, I use those kind of as momentum indicators. Closing above the 9 is the first step. Closing above the 20 is the second step, so on and so forth. It's not much, and I'm certainly going to say this is the most bearish looking chart, in my opinion, right now, but definitely showing some strength in holding up. Now, again, let's see how we respond to that news. Whatever the futures market does, particularly if it sells, that'll maybe spook the market, start selling off. Maybe we see some of these triggers get hit on these bearish retracements that haven't hit yet this week, and see how it responds. It's a ton of selling, or is it able to do something kind of like the NASDAQ's done, at least as of today, putting in that higher low and starting to make a run back at that swing. So we might have a couple of days. Now, I think there will be some good day trading opportunities or future trading opportunities this evening if you do trade, those markets. You want to be, on the lookout for increased volatility. While I don't know the future, I would expect there will be increased volatility. That is what I'm looking for going into tonight and to tomorrow. But I think we still have a couple of days for some interesting swings. But again, that can be taken away tomorrow, right? Depending on how the market digests all of this stuff. So, looking at the material sector, it continues to show strength. And again, it's one of those that day by day, I've not been willing to go bullish, but I've gotten less bearish on. It's got its last real challenge area, in my opinion, before I can start to kind of look at it like I look at financials. They've done enough to kind of keep me from, a broad bearish perspective. They're, of course, about to test this old resistance level, this major support level. That, of course, was a major breakdown point. We saw that happen together and basically free fall from that point. That should be a challenge for this, technically speaking. Let's see how it responds. I'm open to going bearish up there because I'm going to get an interesting risk to reward ratio, right? If I sell, today's not a great day. That's a very strong candle. But hypothetically, this is a doji, right next to it, and we were to go short. Well, I think it's a fairly easy to manage trade. Either it drops down and resistance holds and pushes us down, and I make fair return, or it breaks back above that breakdown point. I lose 50, 25, something like that cents. Risk to reward wise would make sense to me, at least. So I will definitely be not saying that we should or shouldn't trade that, but we may very well just break through it tomorrow, right? Or we might see a bearish engulfing candle tomorrow. We don't know. But risk to reward wise, this is a very interesting selling point. If it breaks back above that, it's not going to get me jumping in as a buyer from a broad perspective, but it is going to, that's did the first thing. It broke above the 9, closed above that 9. That's always something. Now it's above the 20. That challenge, that actual challenge should be a big one. It should lose that fight just from a probability point of view, in my opinion. But we'll have to wait and see. A very interesting placement over there. Energy was just kind of blah today, but I don't think any of us here are all that surprised after looking at all that history back in the springtime, late winter, early spring. At least to me, I do think this continues to be right back in that range until I come out of it. That's how I'm going to treat this area. Interesting that these energy stocks are holding up well while we're watching crude, really, really struggle. But of course, they're all going to be tied directly to the crude prices. But this should be a tough place to break through to. This is certainly an old level of resistance. Maybe it's not quite as, jumps out off the chart as much as some other things. But like I said, I remember, watching that for like 6 weeks, waiting for it to break one way or another. So I would expect it to be a challenge for us in the days to come. And I could understand if people started to go short there, basically playing like they were back here, buying at the bottom, selling at the top, buying at the bottom, selling at the top. It was very effective in hindsight, at least. So I wouldn't be surprised if some folks are going to be looking at it that way. Obviously, I don't think we have any sell signals just yet, but again, this should be an area from a technical point of view that presents us some challenges, in my opinion, at least. Over on the industrials, again, another pretty solid day over there, taking those few steps. And that's why I'm kind of falling off. I'm still open to these bearish retracements, and gun to my head, that's probably what I would do. But like I said, I was, really excited about bearish retracements on Friday, Saturday, and Sunday. And I'm just seeing things that are just showing a little bit of strength. I mean, I'm not seeing these huge, things that are just, wow, that is the strongest thing ever, like breaking of an all-time high or something like that. But just these little things, this momentum carrying on. If we can, if the Bulls can win the election, whatever that exactly means to them, whatever, but if they can win, I would expect some interesting times, no doubt. Over in tech looks, of course, very much like the NASDAQ. One of my favorite type of charts. It's just very easy, in my opinion. If we break resistance, we've made higher lows, we've broken, made higher highs. In this particular case, we will have closed above the 9, above the 20, above the 200. Those will be a lot of, little things, right, that can add up to some bullish signals. Obviously, right now, again, it hasn't reversed trend yet, and it very well may not. Just because it doesn't free fall doesn't mean it's not going to continue to work down, right? But again, that's why I love this development, because to me, at least, it's very clear. If you're a bear, as long as we're below here, we're good. That breaks, you need to rethink your priorities, at least in my opinion. We'll see where we go in the days to come. Another strong day in the staples. That's been a very strong area and held its strength. Is of course, this is, naturally a defensive type of a sector, and the market overall has done well. We saw materials, we saw industrials, both have really strong days here, both days really this week, certainly today. And then money's continued to work into this material sector. So maybe it's not just because it's defensive, right? Maybe it's because people like these companies. Maybe it's because they like these charts. Maybe it's because these stocks are breaking resistance. And I think that's exactly what it is, maybe a little bit of both. But another strong day over there. I mean, we are, just an eyeball's glance, we're pretty extended to the upside, but that doesn't mean we have to come down. That certainly doesn't mean we have to come down tomorrow. Right, our trend continues to look very strong. I would watch, that 55.50, that resistance that we basically watched all last week. If we do get a pullback, kind of as that first line in the sand as a potential buyer. But really looking at the sector as a whole, I mean, we're seeing some pretty good stuff in this sector right now. Chart definitely looks good. Anytime you see something breaking lots of lines, it's a good thing usually, because that means it's taking out resistance, or I guess it's taking out support. That's a bad thing too, right? So I guess it depends on your perspective. Over in the utility sector, again, come off of that support. We saw that nice upward movement yesterday. I'm not terribly surprised it started, heading that way this morning and was able to continue onward. I still think, again, I'm looking at this sideways. Maybe I get natural gas where I look at it sideways and then it gaps, one way or another and kind of takes out any potential entry I have. I don't expect the utility sector to do that, but natural gas is much more likely, in my opinion. But it might happen. But I'm going to continue to treat it as such. I think it's fine to be trading it within this trading range if that's your style of trading. I also think it's fine to be waiting for it to come out one way or another before you make any major decisions over in that sector. Personally, that's kind of overall where I find myself. Healthcare, really liking that. Of course, no surprise, you guys know that this has been one of my favorite sectors. And somebody asked me, earlier today why, I liked healthcare off of this bounce. And I kind of talked about, we talked about this together here too. When it pulled back, it was one of those few areas that held that 200-day moving average where so many other areas were failing. But another part of it was it also looked the best on a weekly time frame. Of course, having pulled back into its weekly 50 and holding a couple of weeks ago, that is, of course, an area that I'm going to respect. I'm not going to buy blindly off of a weekly 50-day moving average, but I am going to, be thinking about buying, if I get some signals once I pull back into that average. The thing about pullbacks, especially deep pullbacks, is to get them, we have to have scary things happen from a bullish point of view before they happen, right? We don't get opportunities to buy bounces off 200-day moving averages, 50-week moving averages, long-term trend lines without the market or the stock selling off and kind of going into some shorter-term downward trends. And that was one thing that really, I appreciated about the healthcare sector. One of the reasons I felt from a bullish point of view, especially, early last week when we were kind of looking at it, this should be, we should be seeing a retracement, but I'm not going to get my hopes up that this is going to be the bottom. I wanted to be trading into things that I thought were strong. And, when I looked at the chart between the 200 holding and then the 50 on the weekly, that really made me feel that this was an area that I could believe in a little bit more. Now, in hindsight, we could have bought a lot of things, right? In hindsight, we've had a pretty good overall, week and a half in the market, and most things have went up. So in hindsight, it really didn't matter. That analysis didn't all that much, right? But it could have. And it didn't hurt, right? It didn't hurt the way that, the healthcare sector has rallied. So always, whenever you're trading, you always want as many good things going for you as possible, right? The more, the merrier. The less things in your way, the better. Speaking of in your way, we continue to go back and forth at the 200, at that previous swing low, that previous resistance level over in the discretionary sector, holding up, fairly well. And again, I think I told you this on Friday. I was surprised as I was looking at stocks in this sector, how many I didn't hate. I thought that was going to be my favorite bearish sector, and it didn't really end up being that way. Some of those charts were looking, not good, but not as ugly as I thought they were going to be. We continue to fight. I do think this is an important price point with the history that we've seen here, both from a resistance level, a breakout point, a support level, a breakdown point, lining up with the 200-day moving average to boot. But again, it's kind of done a few things right. Caught the 9, broke the 20. It makes sense that it's struggling at the 200. I do expect that to continue to cause it trouble, and get into my head, I'm going to bet on it pushing it back down, at least in the short term. But luckily, I don't have to trade with a gun to my head. That's a good thing. So will be interesting to see, though. If it breaks out again, it's kind of like that, that financial look where we took out so much. And again, it's not a lot. We're about to challenge the major resistance over in the financial. Well, major may be a stretch, but our previous swing level of resistance for sure. But it's just those little things. I always want, if I'm bearish, I want the chart to look as ugly as possible. If I'm bullish, I want it to look as pretty as possible. I want no questions asked. I want everybody to say I'm doing nothing or I'm on your side, Frank. It may be easier said than done, but that's, of course, what my goal is. Watch this high point here on the financials. Obviously, that was resistance before. That is our previous swing level of resistance, and we're getting awfully close to it. At this point in time, I have to honestly say, I would be open to a pullback down back to this old support level, back to these averages. Now, if it sells off all the way down there tomorrow, that's not what I mean. But if I gradually work my way back down and see some signals, I actually honestly be open to buying financials in that scenario. And I think that's an interesting thing for me, at least, because I did not, again, looking at so many scans last week, I didn't think I was going to be feeling this way here today. Of course, looking at the real estate sector, again, to me, it's still kind of choppy. We closed, I think you could argue we closed a hair above the break of that resistance level. We obviously did close above the 50-day moving average. I still don't like it, and I still don't anticipate doing anything with it, to be quite honest with you. But if we're able to continue that momentum going into tomorrow's open, breaking today's high, I could see, folks using that as a bullish signal. I do think us closing above the 50 and, arguably, but it's very close, that resistance level from back here, upward movement would, I think, be some confirmation for some traders from a bullish point of view. So I could understand that. We've seen things turn around. The 9 moving average has stopped falling down, stopped being flat, is starting to push us up. Our 20 is starting to work its way back up. So there definitely are some bullish signs in here. I just don't have a very good handle on the sector. I'm not really a huge fan of this sector as a general rule. It's not one of those areas that I really love to trade. And only really when I see very established trends or very clean breaks and things like that is when I focus on this sector. But we have been making those higher lows, taking out resistance. Would be interesting. I think looking at that high point that we hit when we tried briefly to break the 50 the first time would be a price that we can be keeping an eye on too. That was resistance, right? So if we can take that out, carry on this momentum, maybe we can get some bulls behind real estate. I don't see myself being one, but I wouldn't be bearish in that scenario. So I guess that kind of makes me a bull, just makes me one that's not going to do anything. So taking a look at, lastly, the communication services, very, very similar to what we've seen develop in tech and the NASDAQ, where we hit that high. We showed some downward movement enough to trigger some bears into the downside yesterday. Haven't done anything to prove that they're wrong, in my opinion, by any means here today. But now we've seen a little bit of upward move. So again, from this charting point of view, I do think, what bearish signal would be breaking that swing low from yesterday. I think a bullish signal, although this area probably not going to, there's better areas in my opinion. There's going to be easier to deal with charts than that some of the stocks. There's so much overhead on so many of the stocks, like the Netflixes and stuff like that in this sector. I have a hard time thinking this is where I'm going to be looking at, the market when it first starts breaking back to the upside. That's just me. Other people are probably going to feel a little bit differently, but there's just going to be, there's just so much. We get through this, but then we have to test this old support level. Then we have to test the previous swing high. Then we have to test the 50-day moving average. Then we have to test up here. There's just so much resistance every step of the way, and yuck. That's why those NASDAQ charts or that tech chart is just a little more appealing. The healthcare is a little more appealing. There's just less in the way, and for me at least, that's the big philosophy that I have as a trader. I don't want anything in my way. Don't have to be my friend, but don't be my enemy. It's always been my philosophy. So we'll see where the week goes. But obviously, I think to a large extent, the market kind of wanted to see what the election was going to bring us, and are probably going to look to react to that tomorrow. Obviously, I may be completely wrong, but that's kind of what today felt like. Well, let's just kind of go with the flow because tomorrow's the day we're going to break out or we're going to break down, and we'll see if that's how it plays out or not. Over in the gold department, downward movement off of resistance. We've seen that for a few days in a row. A little heavier on the downside today, but certainly nothing substantial. Of course, struggling with resistance is something that we should always expect, especially when we've seen it happen as many times as we have recently in gold. Again, really, I don't really think anything has changed from an evaluation standpoint. As long as we're above this old breakout point, the 50-day moving average, I'm cool with being a bull. Love to see a breakout. Buying down here, buying on a break. Both of those would make a lot of sense to me. If it breaks down, then it'll change my opinion. And certainly that would get me to come off of the bullish stance if we break and close below the 50-day moving average there and this breakout point. But we're a ways from that potentially even happen, right? I'm not saying it's going to. Most likely, it's probably going to continue to trade within this trading range, right? Most likely tomorrow we're saying the same thing. It's still somewhere in here, went up a little, worked its way closer to support. But most likely we'll still be sideways because that's usually how this stuff works. But one of these days, we're going to break one way or the other, right? And we'll be there when that happens. Same real situation, of course, in silver. continuing to work about halfway through the trading range, caught its footing on the 50, but that 50 is really flat. We're sideways. And while I do believe in the concept of moving averages acting as levels of support and resistance, when we do go sideways, they're just always there. I don't really pay that much attention to them. I could honestly take these moving averages off of this chart in a sideways trend because, of course, they're in the middle, right? If we go sideways, so I'm not overly, fond or care really one way or the other. Some people might use that as a catalyst, and I would understand to look for some buys off of that. But again, I think when you're playing, anything that looks like this right now, it happens to be copper and silver, but the chart is the chart. You're either coming in at the bottom or the top, because that's where you're getting your good risk to reward. If I sell at resistance, if it stays sideways, I make good money. If it breaks out, I stop and lose a little bit. If I buy at support, if it bounces, I make good money. If it fails, I lose a little bit as I stop out. So either playing at the edges or waiting for it to cleanly break one way or another. That's certainly been my read over the weeks, as I think the real read is off of 15. I am open to at least the theoretical concept of buying down here. But of course, when we saw it, both last couple of times that we pulled back here, you had to be pretty fast to be able to trade the bounce because it basically took off once it got there. Not a lot of daily on a daily chart, really no signals whatsoever. So you really had to be trading intraday to probably take advantage of those bounces. Over in the dollar, continues to hold that 96, little back and forth, little back and forth. That's an important price point. Now we're another day into it. Of course, whoops, we broke that resistance. We watched it fail the first time. We watched it break out. We watched it run pretty cleanly up into the low 97s, pull back into that. Now we're on day 3 of that being a support level. That, as long as that holds, I think that's, of course, going to continue to look like a bullish chart. We're now going to have that kind of start to line up with the 20. It's kind of caught up. But what happened with these moving averages is when it first broke out, for example, the 20-day moving average, which is kind of a short-term average that a lot of traders use, and even the 9 is way down here. But as days go by, those averages are able to catch up. That's what I mean by catch up. Now it's kind of worked closer to the price of the stock as a potential support level. We can also put together a little bit of a trend line here, lining us up with just around that $96. So $96 looks like a pretty easy place to be keeping your eyeballs to me on the dollar right now. Hold resistance, breakout point. It's about where the 20 is. It's approximately where that trend line is, round number. So that general area, and that might be plus or minus a little bit, right? A lot of times we have to remember that support and resistance are usually an area and not a specific number, even though most of the time we call them a number. I have to call it something, right? Whether it's 96 or 95, 99 or whatever it is. But that is an area. And I do think there's a lot of things that we can be looking for at that price point. So it'll be interesting to see if we're able to bounce off of that. If that stuff starts to falter, then all of a sudden, I'm going to be concerned it's another one of these failed breaks. And then for at least short term, that would get me off of the bullish side of things. Whether or not that'd be enough to go bearish would probably depend on you. But as long as that holds, I'm okay saying that I'm on the bullish side of the dollar on the shorter term time frames. Over in natural gas, not much action, a little bit of selling off of yesterday's gap and run. No surprise, very extended to the upside. I don't know what you do with the chart that looks like this. If you're not there already, I'm not going to go short on this because there's a ton of momentum. I'm doing everything right from a bullish point of view, but it's clearly, it can't keep up that momentum from yesterday, right? It just can't. That just can't happen. At least, day to day. I think we just have to watch for a pullback if we're not in it. And we're just going to have to let that develop for a few days. I don't see a great trade on natural gas. It's kind of frustrating, as I said yesterday, because if we just would have closed a little bit above the breakout point, and then started upward movement, maybe we're all in natural gas and laughing all the way to the bank. But that's just not the way it was meant to be this time around. I think really the smart thing to do, if you're not already here, is let it pull back or consolidate at top so we have another breakout opportunity. I'll be the first to admit I don't love jumping in the day after a gap or anything like that. So maybe that's just a me thing. But for me, it's a pullback that I'm going to be watching for. Let these moving averages catch back up, see if something can develop later in the week. Something will eventually develop, just probably not tomorrow unless you're doing some intraday stuff. Lastly, of course, crude continues to slide to no one's surprise again. We've watched it do, bearish thing after bearish thing from the, it didn't seem it at the time, and it was just one thing, right? But it tried that pullback. A lot of us, were bullish during that little pullback, then took us out. Then it worked down, made a lower high, lower low, high, broke the 200, lower high, broke support. Then, of course, we broke that pretty significant level here last week. There's just nothing to prop it up. Again, one of those things, it's very extended to the downside. I don't necessarily expect it to free fall, down to the $60 mark or to the $58 mark. But those are areas where really our next, support levels are. Have our swing down here. And of course, we have this little point from back here at around $60. I wouldn't buy it off of that price by any stretch of the imagination. It's going to be a lot to do to get me bullish again on crude oil. This chart is ugly, but we're very extended. Of course, I expect at some point we're going to have a bearish retracement. That was what I will expect it to be. If crude just has a V shape and then runs straight back up whenever it finds its footing, it's going to have to do it probably without me. Now, again, sometimes that happens. I'm never going to expect it to. So we continue to be very bearish over in here, very extended to the downside. We have to kind of grasp for straws right now in the crude market because there's not a lot of great levels of support. And this was some support. It was. Is it a major level? Not in my opinion, but it was. Then we get down here, and then we get down here, and then we can go in, okay, well, what if we look at a weekly chart? What can we find here in a weekly chart? Yeah, broke that 50. Well, we don't have that holding us up. We've got a long ways to go until we get to a weekly 200. There's just not a lot of support. And of course, crude can run, for a long time, one way or the other. So it's not one of those things that, well, is crude really going to go down to $30? Yeah, it certainly can. It has in the not too distant past, right? So it certainly can. Overall, I think you have to continue to look at this chart bearish. I really don't think there's really any argument right now from a bullish perspective. Whether that means you're trading it or not, of course, is up to you. But I can't see any great reason. I always try to put myself in the other side's shoes. Well, if I was a bull, what would I be hanging my hand on? I got nothing. I got nothing. And of course, we've seen that progress over the last several days after it broke this support level back here. There's just no reason. There's no reason for a bull to buy. I mean, they might, but why would they? So, interesting day in the market. Certainly ugly looking over on crude. Ladies and gentlemen, that is going to do us here today for the market recap. But hopefully that gives you some ideas. Like I said, keep an eye. You don't have to sit and stare at the futures market tonight. But just when, before you go to bed, just go check it. Go to the market skyline and see what's going on over there. Or, go to your charting before before the open tomorrow when you're having your coffee. Check it out. Just see how the market's responding. Don't go too crazy because it might, throw a fit tonight and then rally up strong tomorrow or vice versa. But let's just see if it's moving. That's kind of what I want to be looking for. I think it's one of those situations where we can look for bullish or bearish opportunities. We just want to be trading into strength if we're bulls or weakness if we're bears. I don't want to try to guess the bottom because that's a lot harder than, the market's rallying up, I'll just go trade something that's breaking resistance, right? That's just a heck of a lot easier to do, in my opinion. So make sure you're trading with your charts. Whether it's bullish or bearish. We'll see how the market reacts to the earnings results here, of course, tomorrow. So with that, ladies and gentlemen, as always, it's certainly my pleasure, and I do appreciate everybody's time. Be sure, if you haven't already, to subscribe to the channel so you can always be alerted when we're going live or when we're adding any new videos over here at Tackle Trading. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're doing and watching during the market day. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up to let us know that we are on the right track. With that, ladies and gentlemen, get out of here. Happy trading. I'll see you in the next one. Thank you guys so much. Have a great evening, and I will see you tomorrow. Good night, everybody.